Earl, it's me, Tom Weller from forexreviews.info. In this video post I wanted to go over how to get more than 100 pips per trade. If you're the sort of trader that's just getting 5 or 6 pips, 10 pips, or even 20, 30 pips, this is the sort of video you'd probably want to watch. It's a style I use and has worked for me for a long time, and it can easily get more than 100 pips. In fact, you can get often up to 150 to even 200 pips if done right. Okay, so first of all, on the Euro-US chart, this is the 4-hour chart, by the way. You can use the daily. I like the 4-hour, just shows a little bit more. I like to think in a 4-hour way, but it shows a little bit more of what I can see on the chart in that zone. I always refer to the daily chart though. So first of all, what I'll do is I'll jump to the daily and I'll just identify the strong zones first on the charts. These are what I call the strong support and resistance zones. And then I'll jump back to the H4 and I will identify ranges on the chart, or range formations, whatever you like to see it as. Okay, how I identify ranges is I'll wait for a price to hit a top, then hit a bottom, hit a top again, hit a bottom, and hit that top again. After that, it's a range, and a lot of traders will buy and sell within that range. So I'll highlight it. By the way, if you've never traded ranges before, I highly recommend adding them as something that you notice in Forex. You'll find that often ranges are respected highly in by the top traders, and the top traders are what move the market. So these areas give us, it helps us to identify targets and where to put stop losses as well, and whether we should enter a trade or not. I use them a lot, and they work, and they're very noticeable on time frames like the H4. So if you want to get more than 100 pips, this is the time frame you should flick onto is the H4. Okay, 100 pips per trade, the time frame you should, yeah, you know what I'm saying. So I'm doing this offhand, so if I say anything out of order or whatever, this is not scripted or anything. This is just me showing you how I trade ranges and how I get more than 100 pips per trade. So bear with me. Okay, so here we are. This is the Euro-US chart, like I said, and now I've identified the bottom of the range. Now the bottom and the top of the range. So I'll just put arrows here just to show you what I see here. Now here is an interesting one. The euro recently broke below this range, which is okay. It does that, and went down to basically into the next trading area between 126.70 and 128. However, what is interesting about this is that's okay. When you're trading ranges, you're not thinking about, I'm going to enter blindly at these zones. I mean, you can, it's okay if you want, that's fine. Sometimes I'll put a blind order in at these zones, and you might just have to hold a little bit further if they keep breaking down further. That's up to you. As a conservative approach though, and a high profit approach, what's best is you just put your alarms at these price zones. Once you've set your alarms at these price zones, then what you want to look at is for pin bars, like say you see this one here and this one here. These show reversals, but see how price came down here? It didn't show any reversal signs. Okay, so entering the market you know, you wouldn't have entered that market based off price action. So that's the reason I stayed out of euro for quite a while. I was interested in buying here. I waited, my alarm went off, I watched and watched and watched, and I was like, where's the price action? Is it going to come? Is it going to come? And no, it broke below 128 and continued down to 126.70. I had my next alarm around 126.50, but I think a lot of buyers got a little bit anxious in that zone of 126.70 and they bought up before then. And I wasn't watching at the time. I just like to watch my charts when the alarms go off. You know, otherwise I'm quite a busy sort of person, so when the alarms go off, I'll take that time to go and check the charts and enter the trade if the price action exists. I'll take that time then to invest my money. Okay, so now that I've showed you the range, the average top and the average bottom, what happens when price goes back into that range? It often respects this range again, yeah? So now it's saying that you've got one or two tops here. You know, you've got a conservative top around here, which is 130.50, or the average top, which is above 131. Okay, so when price broke back into that range, it was, you know, this is a buy zone down the bottom here. When it's at the top of this range, you're looking it as a sell zone. So as a conservative measure, say I put a line across here and said, okay, if price moves down here and we see some nice price action, which it tends to show, then I will sell. Now if price comes down here and then shows some nice, this is a good spot to put an alarm by the way, and then shows some good bullish price action, then I will buy. I mean, that's as simple a strategy as this is. So basically identifying ranges is the key. So you're looking for big movements, this is big swing trade moves, and looking at price at these bottoms of these ranges for bullish price action and at the tops of these ranges for bearish price action. Now once you notice bearish price action, I mean, look at that good pin bar, look at that bullish pin bar, look at that bullish pin bar. You know, we got it's not the best price action here, but it's okay. It's got a nice little railroad formation. We've got a little pin bar. Yeah, here we got a pin bar here. Sometimes you just got to look at the chart a little bit more. But as you know, each of these candles is 4 hours, so it gives you plenty of time to enter. So we'll move over here now. Say you just took it to halfway, the trade. Say you sold here, yeah, and price came back down like it did before in the past. Even if you took it halfway, that's 126 pips. Now if you took it the whole way of the whole range, which is what people call, you know, complete range trading, that would be 240, around 250 pips. So you can't say there's not enough pips here, that you can't get that. You can't say that it's really hard to get more than 100 pips per trade. What's hard is the psychology of it. Understanding yourself and understanding these moves in the bigger market. These are the areas that get traded the most between these ranges. If you look across all the charts, you'll see ranges moving up and down, multiple times, and they just keep going for such a long period of time. Okay, so now that I've identified this range, I've showed you that even halfway gets you more than 100 pips. I'm just trying to think of anything else you want to know. Oh yeah. So if you, so now that you've entered here, say you entered here on a sell or you've entered here on a buy, then you'd want to put your stop loss just above the previous high. Right, if it was this one up here, it would be here, this one here, and if you're entering after this pin bar, it'd be here, after that previous pin bar here, or this one, just this bullish progression up here, bullish engulfing this is called, see? If you haven't seen, if you're not too sure about candle formations, bullish candle formations and bearish candle formations, then check out my post on that. I have a big post on identifying different candles, and I also have videos on the subject as well. So just browse my blog, you'll find it. Okay, so now that I've identified this on the euro, what I'll do is I'll jump across to another currency pair, the GBP, and I'll just show you quickly there as well. Okay, I straight away see one, almost straight away. Like I said, these have to form, but you'll notice now in the future they'll often be respected. Okay, so this is quite a strong trading range, and as you can see, you know, it's had average bottoms, average tops, bottoms, tops, bottoms, tops, and they're all averaged out. So when you're down in this zone, down the bottom of it, you're wanting to buy, right? And at the top, you're wanting to sell. You don't just want to sell there though. You want to set your alarms. You want to see what price does there. Then, if it starts heading in your direction with good price action, you know, such as this, or such as this, such as this railroad here, such as this pin bar here, bullish pin bar, such as this pin bar here, then you can enter after those moves, which gives you a more conservative approach and a more responsible trading approach. So it'll enable you to get way more pips from the trade. Like as an example, say you entered a sell after this previous railroad on this up move in this range. So you entered here in the next candle in that direction. You just aim for the average bottom. Okay, here's a nice conservative average bottom. That's 122 pips. Okay. And was that hard? Okay, we got it here again too. 140 pips here up to that pin bar, and here, let's see after this pin bar here, 116 pips. As you can see, these are all over 100 pips. 100 pip moves in this little range. Okay, now I'll get rid of that and I'll go to the Australian. Now I already prepared this one early because I was actually looking at the ranges of this chart. So what I did is I just went to the daily chart, looked for the the average range that's happening, and the average range at the moment is between 101.80 and 106. As you can see, this is the top, 106, 106, 101.80, 101.80, 101.80 area. Sometimes it goes a little bit further down, but it's still respected, see? And so if you look at the market, you can see where it's probably most likely going to go. Is it going to fall back down? I mean, it could fall back down. I mean, there's a lot of fundamentals that are saying the Australian should go right down again now. But like I said, if it's going to keep going up, these are the areas which you want to look at, above 105.50 to 106, because that's the top of the range zone in this. And as you see, I drew a line here, so it's basically saying, like, okay, if you get like a nice pin bar, see this is a nice pin bar here, say you entered here in the past, and say this presents itself here again in the future, very highly likely. These ranges happen time and time again. Like I said, this is a massive range, by the way. So you entered after this pin bar, just conservatively. Okay, the pin bar is saying it's rejected at 106. You entered here about 105, about 105.60 area, 105.55, and you just wrote it down, You said, I'm going to go all the way to the next zone. It's about 350 pips to the bottom of the zone. I mean, 350 pips. Now, in this situation, you put your stop loss here. Yeah, you would enter about here, and you would lock in your stop loss every time it breaks below a problem area. Like here, 104.50, it breaks below 104.50. You would lock in, 50 to 60 pips to begin with. Then as it breaks below the next range, you'd be locking in more like 80 to 100, and then as it breaks below here, you'd be locking in more like 150 pips. Now, once it gets below the 50%, the 50% middle area of the range, what is the best thing? What is the thing I recommend to do? And you'll probably like this as well. When it gets to about 50%, because this is the average price of this range, which is about here, okay, 103.70. Okay, I'll just change that so you can see that really well. Okay. Alright. So once price gets under this area, this is where you would start, I would start to tighten up my stop. And the reason being is, like, just tighten it up. Like, don't have as much leeway for price. So the reason being is, this is a common area where price will go back to retest maybe the top of the range again. And if that's the case, you want to get out of your trade. So you just start tightening it up here. And if for some reason it keeps going down, keeps going down, keeps going down, just keep tightening and just keep following it along. Keep following it along. Keep following it along until eventually price around here maybe, or a bit lower, the price flicks up and hits your stop loss, and you lock in maybe 250 to 300 pips, which is a really good trade. Okay, so different ranges, different aspects of trading. Like I said, the range on the euro, 128 to 128.30 to 131.30. It's an average of about 300 pips. This Australian one range is an average of about a bit over 300 pips, 350. And this GBP one was an average of about 150 to 160 pips. Just this little range here. That's not a really big range, that one on the GBP. Okay, so if you enjoyed this video, I hope this helped you to be able to get more than 100 pips. When I started range trading and using only the major support and resistances, getting over 100 pips now seems like a piece of cake. I can remember when I used to go for, like, 5, 10, 15, 30 pips on my average trade, and yeah, still sometimes if I see the market is changing or dramatically, or some big news event is just coming out and I think to myself, well, I want to be out of the market, sometimes I'll take small pips, but generally overall you'll find that these ranges get respected time and time again. As you can see now, I'll just assess the chart now. Still another 29 minutes until the candle ends on the H4 for the euro. We just broke a significant area, which was the 129.90. It wasn't really a major support, or it wasn't really a major resistance or anything like that. It's just that it was the last Friday's week high, and price for over 24 hours meandered below it, just a little bit below it, and it sort of looked like price was maybe willing to retrace a little bit for a lower entry. But as you can see now, we're getting up to 129.92, and we've broken above. This is the last Friday's high, broken above that area. So now you can see that where is most likely price going to go? It's going to continue in this price pattern. We might get a bump around here in price. As you can see, there was a mediocre high here around 130.50. Might even turn around there. But if the range is fully respected, then I'll be looking around the price of 131. That's where that will be where I'll be setting my alarms on my. Well, I can actually have those alarms set up now. 131 on the euro, and around there, I will be looking for price action that goes down to about maybe just below 131. I'll be looking for price action that's indicating it's starting to go back down. If we start to get a sell-off around 131 or above 131, then I'll be looking in this zone, this area here. Okay, for decent price action between this red line and this blue line. I'll be looking between here. I'll just get rid of this range. I'll just show you without those. Right, here's the bottom of the range. This is another way of doing it too. This is one way I do range trading as well. Sometimes highlighting the whole lot can confuse some people. This is the top of the range. So these areas, see these areas are highlighted? These are areas you don't trade. You don't trade in here. Yeah? In here, you're just watching to see what price does. As soon as it breaks out, you assess, breaks out below here for a sell. So you assess to see what the price action is. If the price action is good as it's breaking down below, enter the trade. Down here, if the price action looks good, like this pin bar here, as it's breaking out of here, enter the trade. Bullish. Bam. I mean, look in the past here. I mean, if you entered after this bullish pin bar, if you went the complete range, you could have easily gotten 230 being conservative, or if you just went all the way to 131, bam, 240 pips. Now, you can't tell me that's not a great trade. That's an awesome trade. And that's the sort of things to identify when identifying ranges and strong support and resistances. Okay, so thanks for watching this video. If you have any questions, like I said, feel free to comment below on the video, or comment below on the post. All questions are welcome here, and if you have any other questions on trading, feel free to ask as well. Thank you for watching the video, and have a lovely day.